Welcome to the Business Broadcast.
Hi, how are
Uh,
you?
Hi, Chris. Lovely to see you. So, for everybody watching, we are doing this slightly differently, Chris and myself today, because we've actually done this yesterday. So this is a recording. My fault. It's because I'm as you are watching, I am having my COVID booster. So we just thought, right, we think it's really important to have a talk regarding mortgages, which is why we've done it today. So however, as always, if you've got questions, do still put them on the chat, because we'll be able to go into LinkedIn and answer them on there either directly or contact you personally. So please don't be afraid to still ask questions. But I am delighted today to have Chris joining us. So he's from Regency Mortgage Services. I've known Chris for many years, and I particularly thought he was a great one to talk to about the mortgage turmoil at the moment, because I know he's got his finger on the pulse of what's happening in the market, and he's done a great service to one of my employees recently. She was absolutely delighted that he got her a fabulous mortgage. So, and that can be no better recommendation than that. If Susie's happy, everybody's happy. So, yes. So, without any further ado, we will dive straight in. So, Chris, obviously, there's a lot of different things happening at the moment in the economy, with interest rates, in gilts, in all sorts of parts of the economy at the moment. Everybody's worried about recessions, worried about interest rates, everything else. Today, we're just focusing in on what does it mean in regards to your mortgage, aren't we?
We are.
So let's take the first thing. Why are interest rates rising?
Well, firstly, Nikki, I've been doing this job now since 1996, and I started as a financial advisor at Prudential, and started this business as a self-employed mortgage broker in 2002. So it's 20 years, and in 20 years, we've had our ups and downs and recessions and everything else that's gone on, but I've never seen anything like we've had for the last 2 or 3 weeks. It's just unprecedented times.
Sorry, seriously. So this is more turbulent than you've had over
Yeah.
20 years.
Yeah, this past 4 weeks has just been horrendous with what's gone on. To give you some sort of history as to what's happened, and most people will probably know that the Bank of England base rate has been very low for a long time. In December last year, it was 0.10%, and that's crept up to 2.25% today. The main reason for that is that inflation is high, mainly due to the Ukraine and Russian war. So the price of gas and everything else is going up, and the Bank of England are trying to to keep a grip of that. But the big problem came with the mini budget a few weeks back now, when they
The
introduced.
fiscal event.
Yes, which you all know all
There
about.
was a budget. I mean, we've
Yeah,
had budgets where there's less happens than the not budget. So yes,
yeah,
it's definitely,
exactly.
I would call it a budget. Yes.
So as the government are borrowing this money to pay for these cuts and changes, which has spooked the market. And I'm not an economist, but by any means. But what's happened is interest rates have started to go up. Everything started to go up. Gilt rates, and it's just created a really tough time for people with mortgages and for mortgage brokers trying to arrange mortgages for people. We're at a stage where we're doing some research in the morning for a client, finding a product, and by the afternoon we're having emails to say, to secure this rate, you need to submit this application by 8 o'clock tonight or it's gone. So there's
Crumbs.
only so much time you've got in the day, so it's very difficult to try and secure. So we're having quite a few late nights trying to secure these products for people, and people are very worried.
So this is, while there's turbulence, there's obviously still the risk that rates can carry on
Yes.
increasing, presumably.
Yeah, and this is the thing that, none of us know what's going to happen next. I was looking back yesterday, actually, because I knew this was coming up today, and I was looking back at for one of my past clients. So last year in September 21, I was looking at a remortgage, a 5-year remortgage for somebody, and the lowest rate that we got at the time for a 5-year fix was 0.99%. So not even 1%, which was fantastic. If I look at that same product today, we'd be looking at a 5-year fixed at 5.19%. So that's over £500 a month more on this particular case.
Wow.
Yeah.
Sorry, and how much was the mortgage? So for borrowing for how much?
It's about 286,000.
286,000, and it was £500 more
Yeah.
a
But
month or year.
This particular client, yeah. But I mean, the general rule of thumb, Nikki, is that for every £100,000 of borrowing, if the rates go up by 1%, it's roughly about £50 a month on the mortgage.
Oh, that's
Is,
a useful stat to know.
but it is dependent on individual circumstance, term of the mortgage, individual cases really. But this is the kind of thing that's happening, and the problem is nobody knows, when this is going to change, if it's going to calm down, if it's going to continue to go up. There's lots and lots of people worried.
So I think it's important. Obviously, as you said, there's only so many hours in the day for you to get all the stuff done anyway. So, and I think for the purposes of today as well, let's triage into the different borrowers. So let me tell you who I think is the most that we need to address first, and we'll go through the different ones. So what I'm thinking is, Chris, if you think this is sensible, I think shall we address who the mortgage people with mortgages that need to be renewed?
Yeah.
I would say they're the most immediate ones we need to worry about.
Yeah.
So them, I would say, and then secondly, people that have got mortgages agreed but they haven't completed on their purchase.
Yeah.
So this is for you guys out there watching. These are the ones that we're going to go through. So just keep your ears open for when we go through the section that's going to be relevant to you.
Yeah.
Then we've got first-time buyers. I think that's an important group to rate, because obviously the government signalling, increase on no stamp duty, etc. That must be great, therefore, for first-time buyers. So let's talk about the realities for whether actually can they get the mortgage. And then the ones that are looking, what to do if my mortgage is going to renew in, say, a year or so. Do they have to do, for example, one of my staff earlier this year renewed early and actually paid a penalty, and he's glad he did. But let's, on priority wise, I think that could be a good order. So first of all, those ones that have got a fixed term mortgage that's about to need to be renewed, and otherwise if they don't renew it, it will go straight onto a variable. What do you say to those people at the moment, Chris?
My main advice to those people would be to seek advice. Speak to a mortgage advisor as soon as you can. A mortgage advisor will sit down, look at your personal circumstances, and go through everything in fine detail, with you. The options are for somebody whose fixed rate, for example, is going to end in the next couple of months, do nothing at all, and they'll go on to the lender's standard variable rate, but that will be quite costly.
And they've got to make sure they can't listen to what we say today, as in whether to do not. That's got to be their personal decision, because no one's got a crystal ball if it's going to go up or down. So they've got to know they could go for fix and know that it's done, or they can take variable for a bit and then see. But that's got to be their choice, isn't it? Just to be clear.
Mortgage broker will help people make those decisions and finally give a recommendation based on their personal circumstances. But the options really are, it's a big gamble, because none of us know what's going to happen. So if you take a fixed rate with your current provider or a new lender, at say whatever they are now, 5% for example, on the scenario that we spoke about earlier, the chance you take there is that rates could come back down. We don't know, and you could be paying more than what you would be if you hadn't
So you
picked
could
it
get
up.
stuck on a fixed rate
Yeah,
for say 5 years, but if you'd waited a bit, it could go down. But we don't know
yeah.
at the moment. We don't know.
The alternative to that is to take a discounted or tracker type product, where you'll be a bit lower than the current fixed rate. But the gamble there is, if they continue to rise, you could find yourself in a worse position with interest rates over the coming months and years. So ultimately, for me, if I sit down with somebody, we would go through everything with them, look at their budget. I mean, the budget is key, isn't it?
Yeah, cost of
Let's look
living,
at,
that's
yeah,
massively
let's look at
changing
a
for
budget
everyone.
planner and see what your disposable income is, and how much you can physically afford to pay for the mortgage each month. And if you're the sort of person that is going to worry every night or every time you look at the paper or read the news about interest rates going up, and you don't have a great deal of disposable income there to cover that if it does happen, then fixing up is probably the best thing for you.
Yeah, for your peace of mind.
But when you
Just
sit down with,
sorry.
sorry, I was going to say, when you sit down with a broker, what we would do is, after gathering all your information and going through a full fact find with them, we contact their existing lender for them to find out exactly what products are on offer from that lender to keep them as a customer, and then we compare that with other products from lenders in the marketplace, and then advise which are the cheapest products for them to go going forward.
Super. So one just slight aside, you were talking about the budgets. Cost of
Yes.
living is changing for a lot of people.
Yeah.
Are you finding pushback from mortgage lenders? I mean, of saying, well, actually, your budget must have changed now.
Yeah.
Electricity going up, whatever. So, are you finding people are being costed out of their mortgages?
Well, things are not so much costed out of their mortgages, but things are changing. Every mortgage lender that we deal with has an affordability assessment that's done to work out if people can afford the mortgage, not only now but in the future. And those calculators are changing because we've got to now factor in the cost of petrol, gas, electric, and future mortgage payments going up. So yes, people won't be able to borrow what they did before these rises. So.
And is that when you say they won't afford it, be able to borrow what they did because obviously their costs are up, and that's presumably if their salaries aren't going up in line with the costs going up at the same time.
Absolutely, yeah. I mean, this is not to say that people won't be able to move mortgage companies and borrow what they have. We've all just got to be a bit more careful about people's affordability going forward.
So, like the mortgage multiples are still, they haven't suddenly shrunk or anything.
Multiples, to be honest, Nikki, disappeared a long time ago. Back in the old days, as you know, it was 4 times your salary or whatever it was, and then from the specific lender. But now it's all to do with affordability calculations, where they look at your outgoings.
Okay.
It's very detail now, which is the right thing to do.
Interesting. Okay, so we've got. So the next category, which caused a lot of panic, is people that had an offer for a mortgage, had put in an offer for a house, and they're worried about, is that mortgage offer going to disappear? There's been lots of scare stories around. Are they true scare stories? Or
do you know what? Of all the mortgages I've done over the past 6 months, remortgages, purchases, where we've got an offer from a lender, I haven't had one that's been withdrawn.
Great.
So I don't see that happening unless there's a change to personal circumstances for the client. I can't 100% hand on heart say that won't happen, but it's not happened with any of my clients, and I don't foresee that happening with offers that are there.
Good news, offers not being withdrawn. However, you still have to presumably consider, because those offers have a lifetime, don't they? They will have is it 90 days? How long are they typically?
That's changing and all.
Okay, interesting.
The majority mortgage lenders, the mortgage offer will last for 6 months.
Oh, okay. Right. Yeah. Okay. 6 months.
So what we've been doing previously, because we can see rates going up, is that anybody that's got a fixed rate ending 6 months before that, we've started to try and secure fixed rates for them for 6 months' time. So we get the rate that was today's money, but we won't need it until 6 months' time.
Okay. So let's go through. So that's good news. So if you've got a mortgage off there, you've got your house purchase agreed in principle, whatever, no need to panic at this moment. Make sure you get it through.
I can't, as I say, 100% on heart guarantee
Yeah.
that. But it hasn't happened so far. Mortgage lenders have been pretty good, to be honest. They've honoured everything that we've done. So
I suppose from the mortgage, sorry, I'm not an IFA and I'm not but I'm just saying that theoretically, I suppose, great, your purchase could go through. Do keep an eye on current average purchase prices.
yeah,
You don't want to end up overpaying on that property.
yeah, and
If
I guess
if the prices, because I know the prices have started to increase, I don't quite know how much as yet, but I know anecdotally from estate agents that I work with that prices are on the decline. But you need to do a bit of research of how sharply,
I think for home movers, it's not so much of a problem. But for first time buyers, we've typically got two types: one that's at home with their parents, and one that's in a rented accommodation. And we're finding that a couple of the clients that are living at home with parents are sitting it out and waiting to see what happens. But the people that are renting are thinking, well, do you know what? We may as well get on with it, even if prices do come down, because if we stay rented, we're just going to be paying another X amount in rent for the next year anyway. So, I guess it depends if they come down, how much they come down by. But
absolutely,
this is all the unknown, isn't it?
Absolutely. So let's go into that. So first time buyers. So, I know sitting in my office, there are several people there that are, have been diligently saving up their deposits. Some might be in rented, some might be still living with parents. What sort of options out there? What sort of things are there? Is there lots of products out there for first time buyers at the moment? Is it a good thing to consider?
Yeah, well, as I say, each person has to make their own choice on that, don't they? Whether they see property prices coming down or not. But yeah, I mean, lenders are definitely lending. There's first-time buyer products out there. We had good news with the stamp duty change. But unfortunately, because of the other changes, the interest rates have shot up, making mortgages more expensive. So, my advice to any first-time buyer out there is to speak to a broker, sit down and have a chat, look at your affordability, look at property prices, and try and make a decision from there. I don't think there's any right or wrong answer there, Nikki, to be honest.
No, indeed. I've again, I'm not an IFA, I can't advise, but I was nervous about any of them buying at the peak of the market. Yeah. So I did say, caution, be careful.
Absolutely. Do you know what though? It's interesting because I look back at when I started this business in particular in 2002. I look back at some of my old files yesterday to look at the interest rates that we were doing then. And it's funny, I did a 3-year fixed in 2004 that was 5%.
Yeah, to be honest, it's not massive interest rates at the moment if you look over a long period of time. I mean, I remember my parents having, it went to 18, 19% or something ridiculous for a while. So it still is relatively low interest rates, isn't it? It's obviously just if people have been budgeting on assuming that they can get interest rate at, literally a few percent, it's going to be a major change. To be honest, this is just an aside, I'm more concerned in lots of ways still about the ratio between average house price and average salary.
Yeah.
That is the gap that still needs some sort of
It's
fixing.
funny. You mentioned that your parents and the high interest rates. Myself and my wife, we bought our first property in the centre, in town, in Reading town centre, back in 1990. And interest rates went to 15% at that point. Luckily, we were fixed at 6%.
Wow.
And I don't, to be honest, I don't think any of us didn't think that interest rates were going to come back up to a normal kind of level. I just think it's the pace at which it's happened.
Yes.
You know, this last few weeks, it just hasn't given people time to plan or adjust. And my advice to anybody with a mortgage, it doesn't matter whether your fixed rate ends tomorrow, in a year's time, 2 years' time. Speak to somebody, speak to a mortgage advisor now, and get an idea of what your payments could look like when your current product ends in the future, just so that you can start planning now, because all the other things that we pay for, our cars, our holidays, everything else that we do is going to be impacted by that. So the sooner...
Yeah, that's really interesting, because that was going to be the thing we were going into, the next, wasn't it, about, if you've got your mortgage going, it's still fixed, but, you've still perhaps got a year, 18 months, so you're saying about planning, but is it so that absolutely makes sense, because I'm a big planner. Start planning now what that could potentially be, but also, can you be proactive? Can you actually go, well, let's unwind my current fixed and refix it?
Do you know what? That's a real tricky calculation, to be honest, and every case is different, because everybody will have different redemption penalty amounts, and it's such a tricky one, because you're trying to work out, if I pay X amount of money to get out of this current deal, am I going to save that on the next one? And nine times out of 10, no, they're not. But what it has given some people is peace of mind to know that they've got for example, a new 5-year fixed at X, so they don't have to worry for the next 5 years. Whether that's going to be financially beneficial for them, we probably won't know until 5 years' time. On the majority of cases, it hasn't been a good idea to pay those penalties and leave now.
Okay, so just circling back a bit. So what is really important, start planning, because there's no good going, oh, I've got to renew next month, in 18 months' time, and then going, oh my God, it's a shock. I didn't realise it was going to, my mortgage was going to go up by X £100.
Yeah.
Look at what it is going to be.
Or
if it is too much more comfortably than you can cope with, then you've got to consider your options. Are there costs that you can cut down? Can you increase your salary? Is there other forms of income that you can add on? Can you rent out a room? All those sorts of things before the ultimate of, I might have to just sell the blimmin' place and downsize.
Time is key, isn't it? The more time you've got to make a decision and make a change, the better it is. If you've got 2 or 3 months and suddenly, oh no, how are we going to do this? Where are we going to find the money? What are we going to do? Panic sets in, and people don't make good choices when they don't have a lot of time to think about it. So so the longer the better. Just get an idea of what it could be.
Also with the we were talking about the peak point for house prices. I'm sure you knew lots of people, as I had cousins that had bought and then at the peak of the market and then went into negative equity. Now, just a general warning, negative equity in the short term is not a problem as long as you can cover your mortgage, is it? It's the problem if you can't cover your mortgage and then you're stuck with a house that's worth less than what you paid for it.
Yeah, absolutely. That, if I'm honest with you, Nikki, that happened to me in 1994. We bought that flat in Reading. We lived there for 4 years, and my wife was pregnant, so we needed to move to a bigger property. And I think it was probably worth £5,000 less than what we
2004.
Sorry, 1994. Sorry,
1994. Because I'm just thinking, 10 years later, when I moved to Reading in, I can't remember if it was 2014. I think it was 2005 now, but anyway, whatever it was, we bought, and ours, I'd been so used to being in London and your price keeps going up every year very
Yeah.
significantly. And it basically stalled for about 5 years and slightly went down. I mean, I lived in that house for 14 years, so it did go up eventually over the period of time. But it's another thing.
Yeah.
Property
As,
investment is
yeah.
not a short-term investment. You've got to
Exactly.
look on the long
Like you
period.
say, let's hope that doesn't happen. But worst
Yeah.
case, if it happens, it's not an issue as long as you can pay your mortgage. It's not going to be a problem unless you want to move property.
Super. Okay. I'm just trying to think. So we've covered people not renewing, whether they can renew earlier or whatever. We've talked about people got to renew now.
Yeah.
We've talked about first-time buyers. Just again, I'm going to circle back almost to where we started from, because I think this is the biggest worry area, and so I want to make sure, because we're nearly at the time of our end, so I want to make sure that these are the top tips ready for those. So
Yeah.
for those that are going to need to renew now, they've come to an end fixed it.
Yeah.
Just reiterate again, what are their options? One, on the renewals, and also secondly, for those being hit by the cost of living, so what are your options? What is your option if you can't afford to pay your mortgage next month?
Okay.
So,
Okay.
sorry, two things to circle on
Yeah.
to complete our half hour, if that's
The
okay, Chris.
first one is, if somebody's fixed rate is ending imminently, next couple of months, seek advice. Just seek advice. Speak to a mortgage advisor. Sit down with them. They'll go through all of your details. They'll look at your budget with you. They'll talk about any future changes that you may have come in expenditure or personal life. And they will help you work out what your best option is. They will look at the products from your existing lender. They will look at products from other lenders out there in the marketplace, and work out with you what is the best thing to do. If you're going on to a second point, is when we give mortgage advice to people, affordability is the absolute key. This mortgage has to be affordable for now and in the future. And with a mortgage or any form of debt, as you know, the longer you have the mortgage, the more interest you're going to pay. So our advice is always to try and have the shortest mortgage that you can, but within affordability. So if, for example, we've got somebody now that is finding that they are going to struggle going on to a new higher rate, one thing that people can look at, and this is not advice, but one thing people can look at is maybe extending the term of their mortgage.
Interesting. Yeah. So if you've got 10 years left,
Yeah.
but you want to make sure, because it's a capital repayment,
Yeah.
to reduce that monthly payment,
Yeah.
if you perhaps extended it to 15 years,
Yeah.
yes, you will pay more interest over
Yeah.
that 15-year period. However, from an affordability purpose,
Yeah.
you would be paying less because you've spread it over 15 years. Then, of course, if it's for a short-term issue, you can always start them paying extra.
Yeah.
That's another point. So
that won't be for everybody, Nikki. But
yeah,
if there's no other choice and people really are going to struggle and can't afford it, that's something that we could look at.
But I think then just summarising at the end, the key thing is there are options. Talk to somebody knowledgeable like Chris, who you can contact on LinkedIn. He's there. He's on there every day. I see him posting away, giving really good hints to people. Contact and talk through your. Don't just head under the covers and worry. Go and be proactive and talk to someone like Chris is not scary. You can share all your dirty laundry on with him, share your bank statements of what's been going in and out and everything. And that's also about planning as well. Because give, don't leave it to the last minute. Give the mortgage advisor plenty of time to find you options.
Yeah, I'm putting a good budget planner together is always a good thing to do. People are amazed when I go through people's bank statements and transfer things onto a budget planner. And when we sit down and look at the incomings and outgoings, people are sometimes shocked at what they actually spend and what it is spent on.
Some people forget direct debits are the devil in some ways, because people forget what they're paying for. There's gym memberships they're paying for, or Amazon Prime that they're paying for that they've forgotten about, or all sorts of different things. Or I've even seen multiple insurance policies where it's like, do you really need all these? Again, not advising whether or not, but it's it's important to take control of what you're actually spending your money on. But for me, I'm definitely going to be looking at seeing how much I can reduce my mortgage by as much as I can before it's got to be renewed. But at least I've got a couple of years until that. Super. Thank you so much, Chris.
Thank you.
Brilliant. Really, really useful. And as I said, please don't be. Chris is super lovely, so don't be afraid to connect with him on LinkedIn, DM your questions. He is super busy getting those mortgage deals through. So if he doesn't return, I'm pretty sure he probably will return your thing immediately. But if he's not, it's because he's trying to get in for that 8 o'clock deal cut off with one of the mortgage lenders. But super. I hope that's really helpful for everyone out there that are worrying, because obviously mortgage is usually most people's biggest monthly expenditure. It's certainly my biggest monthly expenditure. So super important. But thank you very much. And love to have you back again soon, perhaps in a few months, when, touch wood, fingers crossed, markets might have settled a bit more, and then we'll see where we are there. But for now, cheerio, and thank you very much, Chris.
Thank you, Nikki.